Did you know that taxes aren't always done correctly? That there are actually several different ways to prepare tax returns, and that your taxes may have been done wrong, costing you thousands of dollars. In fact, my team at College Tax Refunds has prepared amended or fixed tax returns for over 2,000 recent college students and young adults in just the last couple of years. And we've learned that on average, we are able to help people get an additional $1,300 back per year on their old taxes. Those are tax returns that they thought were done correctly and that we've been able to take a look at and fix for them to get them that extra $1,300. Hi, welcome. I'm Steve Hunt. I'm a CPA, and to me, that means I want to be your consultant for prosperity and adventure. And I'm super excited to talk to you over the course of the next 2 weeks about 15 critical, common, costly mistakes that are made by recent college students and other young adults at tax time. And I want to go over those 15 costly, common, critical mistakes right now with you, just naming them one at a time and not really going into depth. But over the next couple of weeks, I'll go more into depth on each of these 15 common, costly, critical mistakes. So please like the video, subscribe to the channel to make sure you get notified of all of the videos as they come out, and please share this with your friends. If you have any questions or comments as we go throughout all 15 of these, put them in the comments below, and I will be happy to address those concerns. The first common, costly mistake is not filing a tax return. Again, I'm not going into depth here, but if you had any taxes withheld from your paycheck during the year and you didn't have to actually pay any tax, you need to make sure you file a tax return to claim that refund. The next common, costly, critical mistake is not using Form 1098-T to claim an education credit. So the next 5 or so of these mistakes all revolve around these very valuable education credits, specifically the American Opportunity Tax Credit, which can be worth up to $2,500 per student per year for 4 years. And very often students miss it, especially if, as this common, costly, critical mistake says, you forget to use the Form 1098-T that you get from your school. You don't give it to your tax preparer or you don't put it into your tax software, then you will certainly miss out on this credit. Also, claiming only a partial American Opportunity Tax Credit, or AOTC, is a common mistake that can cost thousands of dollars for the student who puts the numbers in to their software, but for various reasons, which I'll get into later on another video, the software doesn't claim the full AOTC, once again costing you hundreds to thousands of dollars. Number 4, forgetting to keep track of the years that you claimed the AOTC. Every student gets to claim the American Opportunity Tax Credit 4 times when they're undergraduates, before they graduate. If you don't keep track of that and you switch tax software or switch tax preparers, you may not claim all 4 years, or you might try to claim more than the 4 years that you're allowed, which can be a very costly mistake. Number 5, reporting the numbers from the 1098-T that your school gave you directly to your tax preparer or to your tax software without altering them if necessary. This is a very complicated area of tax law, and many students miss part of the American Opportunity Tax Credit or the whole thing because the numbers on their Form 1098-T aren't actually presented in a format that makes it easy for you to claim the credit. This has to do with if you received a scholarship or a Pell Grant, and your scholarship or Pell Grant covered a large portion of your tuition. And then you put those numbers directly into your tax software or give those numbers to your tax preparer, and it's very, very likely that your tax preparer or software will not claim the full credit for you. You should instead alter those numbers in a way which I'll describe in a later video. Number 6, failing to request a Form 1098-T if your school doesn't actually issue you one. Schools are generally required to issue college students Form 1098-T, telling them how much tuition was paid and how much scholarships and grants they received. However, your school may not have given you a Form 1098-T if your scholarships or grants were more than your tuition, which happens for a good percentage of students. According to the IRS, all of these issues that I've described here, numbers 2 through 6, result in at least 9 million college students or 9 million families of recent college students missing thousands of dollars every year on their tax return. Once again, most of these revolved around not claiming the full American Opportunity Tax Credit, and in later videos I'll explain to you why that happens and how it is you can make sure you claim that full credit. The seventh common, costly, critical mistake that some young adults make is waiting to get married. Now, this is a little tongue-in-cheek. The rule here, of course, is that if you're planning to get married anyway, you love each other, you want to tie the knot, but you decide you want to wait for financial reasons or you have some other reason, there's really not a good, solid reason that you're waiting, you should probably get married before the end of the year. And that is because then you can file jointly and get many of the tax benefits that come from filing jointly, which I will go into in more detail a little bit in a later video, but I also want to talk about if you choose to file separately when you are married, that would be the eighth common, costly, or critical mistake. Many young adults who have just recently gotten married decide for whatever reason that they should file their first tax return separately, or maybe even their second or third. Maybe they haven't combined their finances yet. Maybe they think that because they were only married for half the year or a couple months that they're not allowed to file jointly. Or maybe they're having an argument or they've split up a little bit, and yet they still communicate and they're on good, friendly terms. Filing separately in many of these cases would be a mistake and result in costly errors. Number 9, failing to file a new FAFSA form, which is the free application for federal student aid, immediately after getting married. Many of you who are college students or recent college students will know that if you prepare your FAFSA form, you may receive Pell Grants or other government assistance. And unfortunately, if your parents have a lot of money and you are single, then you have to place your parents' income on that FAFSA form and you won't qualify for as much assistance. The moment you get married, you should go to your school and file a new FAFSA form. This is because you can then remove your parents' income and you can qualify for larger grants. The 10th common mistake that's critical and costly is waiting to have children until you reach a financial target. This is again a little tongue-in-cheek, but the fact is, if you're simply waiting around, you're ready to have children, you're excited to have children, maybe even you're in college but you still think you want to have children and you're just waiting until you have a little more money, it may be time to do it now, as having another child can help you on your tax return to the tune of several $1,000s. I'll get to that in another video. Number 11, having a baby in early January. Ooh, this is an interesting mistake that I made sure I never made with my own children. I always had all my children at the end of the year. At least 4 out of my 6 children were born in the last quarter of the year. I practice what I preach. If you have your baby in early January, you have to wait an entire year to claim that child on your taxes. But if you have that baby very late in the year, which you may have some control over, and you're going to get the benefit of having that baby on your tax return that you'll file in just a couple months. Number 12, forgetting to claim your new baby, the one born in the fall, as a dependent. This is a common, costly, critical mistake that many new parents make when they have a child who was born near the end of the year and they think because the child didn't live with them for 12 months, they can't claim that child as a dependent and get the earned income credit or the child tax credit. This would be a mistake that could cost them thousands of dollars. All of those last few were about family planning. Now I want to move on to 3 more. Number 13, reporting your health care incorrectly. This is really from a couple years ago when Obamacare imposed an additional tax or fee if you didn't have health insurance. Many young people ended up paying that fee not knowing that they were covered under their parents' health insurance. They didn't report it correctly. And there are other mistakes that are possible. I'll go into those in my other video. Number 14, not earning enough money to qualify for the biggest refundable credits. There's a very specific target window for qualifying for large payouts from the earned income credit and the child tax credit. If you earned only a few $100s or a couple thousand, you may not receive as much money back as if you had earned $10,000 or $20,000. I'll get into the details in a later video. It can sometimes be surprising that you would have received a larger tax refund had you earned more money. And that is the case, and it is a costly mistake that many young people make when filing their taxes. Finally, the 15th critical, common, costly mistake is thinking that your old taxes were prepared correctly. As I mentioned at the beginning of this video, taxes are not always prepared correctly. There's not just one way to prepare taxes. You can often choose how to report your income and get a better refund or a better result. And so if you simply use TurboTax or H&R Block Online or even your favorite CPA to prepare your taxes, and that CPA or the person preparing your taxes was not a college tax refunds expert or someone who deals specifically with young adults and new married families and those who have Form 1098-Ts and new children, if they're not an expert in that area because, say, they do taxes for small businesses because those small business owners like to pay them their high fees, if the person preparing your taxes and using TurboTax was not an expert, there's a very high chance that they missed something that may have cost you hundreds or thousands of dollars. And so you should not assume your taxes were prepared correctly in all your previous years. You can amend or fix your taxes for up to the last 3 years, and you should have a second look. I'll talk more about that in a later video. I invite you once again to subscribe to this channel, and I would love to become your consultant for prosperity and adventure. My name is Steve Hunt. I'm a CPA, and I will talk about these 15 common, costly, critical mistakes in upcoming videos. Thanks so much for joining me.